Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from FX.co portal. Here we go. Today is February 28 and we're starting with Tin Leu, EURUSD currency pair. Despite local jumps in the price above 1.0850 and the euro-dollar pair, there's still fixation below the value in the daily period. This action indicates a reduction in the volume of long positions on the euro, which negatively affects the upward cycle. On the 4-hour chart, the RSI is crossing the 50-middle line from top to bottom, indicating an increase in the volume of short positions on the euro. On the same time frame, the alligator's MAs are directed upwards, which still corresponds to the upward cycle. The current pullback in the structure of the upward cycle can easily bring the quote to around the level of 1.0800. Subsequent movement will depend on how market participants behave relative to this level. In this case of the price stabilization below in the daily period, the upward cycle may be interrupted, positively affecting the subsequent increase in the volume of short positions on the euro. However, in the scenario of the price rebound, there is possibility of a new upward movement with the update of the local high. The comprehensive indicator analysis in the short term and intraday periods indicates a downward trend. Now it's time for the next major GBPUSD, Paulo Greco describes. The average volatility of the GBPUSD pair over the last 5 trading days is 53 points. For the pound-dollar pair, this value is considered low. Therefore, on Wednesday, February 28, we expect movement within the range limited by the levels of 1.2633 and 1.2742. The senior linear regression channel is sideways, and the junior one is also sideways. Thus, there are no questions about the current trend. The CCI indicator entered the overbought area, so we are now observing another upward movement phase within the flat. The GBPUSD currency pair has left the sideways channel and may switch to forming a new downward trend soon. However, the current movement again looks more like a flat. The pair managed to move down more than 200 points, which essentially ended the pound's decline. We expect a resumption of movement to the south with targets at 1.2543 and 1.2512. Long positions can only be considered with the price above the moving averages, 1.2640, with targets at 1.2665, the yellow line on a graphic, and 1.2695. And only with the corresponding macroeconomic background. Both targets have already been worked out, and if a downward trend has indeed begun now, then purchases cannot be a priority. However, new signals are needed for buying and selling, which are currently unavailable. And finally, here's Dimitris Tapas with the gold trading plan. Gold is trading around the 2030 level, which coincides with the 21 SMA, the sign line, and 28 mirror level. The H4 chart shows that gold found strong support around the bottom of the uptrend channel and could find an opportunity for an upward movement only if it consolidates above 2030 in the next few hours. In case of a sharp breakout of the uptrend channel and consolidation below 2028 on the 4-hour chart, we could expect a sharp decline with targets at 2015 and 2000 UNC, and finally minus 1.8 mirror level located at 1984. If the gold continues to bounce in the next hours and remains trading within the bullish channel, we could expect it to reach the resistance zone of 2040. And also 2046, and finally it could reach 2062 for 8 Murray level. Because the Eagle indicator has been given an overbought signal since February 23, it is expected that in the next few hours, gold will break the trade below 2030. Then a signal for a sharp drop could be triggered and we could expect the price to reach the psychological level of 2000 USD. Our trading plan for the next hours is to sell gold below 2030. And above 2031, we should expect gold to resume its bullish cycle, and the metal could reach 2046 and 2062. That's all for today. See you online soon, and good luck!